Welcome to the Real Estate and Wealth Podcast, your go-to resource for navigating the world of real estate investing and wealth creation. This podcast is brought to you by Calvert Home Mortgage Investment Corporation, your trusted, caring, and responsive short-term mortgage lender in Alberta and Ontario. We explore strategic and tactical solutions to elevate your real estate portfolio, drawing insights from seasoned Canadian investors and trusted advisors. In each episode, we dive into various aspects of real estate investing, including market trends, property analysis, financing strategies, risk management, and much more. Whether you're a seasoned real estate investor looking to expand your portfolio or a beginner taking those first steps, this podcast is for you. My name is Ryan Day from Calvert Home Mortgage.
Jesse Bobrowski.
And we are launching the Wealth and Real Estate Podcast powered by Calvert Home Mortgage. We're really excited. It's been a little while coming for this. We really just want to focus on who this will benefit and specifically what we're looking to achieve with this. So for this podcast, we're looking to offer as much value as possible.
What we want to see from Calvert Home Mortgage's side is just as many people being as successful as possible, creating housing stock. Housing stock that Canada sorely needs. So yeah, I think that's really where we can come in, is providing that unbiased, data-driven, quantitative approach to supporting real estate investors. But also, like you said, we've established amazing partners who can provide more of that quantitative or qualitative data and insights, whether it be trusted advisors such as lawyers, contractors, bankers, economists, valuators. We're really excited to bring our network to Canadians who are looking to build wealth through real estate.
We really just want to help serve real estate investors, whether it's 0, 10, over 100 properties, share the insights, learning, and lessons that we've cultivated over the 40 plus years being in business, and share those learnings with the general public.
And it's really where we think we're going to provide a lot of value is unbiased learnings that is very data driven. We as lenders are looking to make our borrowers be successful as possible through education, providing them the learnings. Ideally understanding how to avoid pitfalls in their real estate investing journey and investing journey in general. So we're really happy to bring that.
So what makes our podcast unique and different from others is essentially we'll be going over the perspective from the lender's point of view as well as the real estate investor's point of view. Furthermore to that, it'll be as tactical as possible from what we see on a daily basis and sharing those insights and knowledge with people within our network that we see being successful to the general public.
Also, getting into larger strategic items, talking micro and macro economy, just really looking at the real estate investor lens from a holistic standpoint. We're really looking forward to bringing our unique, unbiased perspective as the lender, and really just sharing that for as many people, as many Canadians as possible to be successful in their real estate investing journey. And really, what we see real estate investors doing is bringing housing units to the market, something that Canadians really need.
Perfect. So super excited for today's episode. Topic's going to be what to do if you're stuck in a private mortgage.
If you're stuck in any mortgage debt that doesn't suit your investment.
Perfect. Yeah, we're seeing a little bit of it, or actually quite a bit of it currently right now. Clients in mortgages that just aren't the best fit, high interest. And we're going to discover and essentially talk about what we're seeing and our recommendation suggestions, leveraging Jesse's 20 plus years in the industry on what to do if you're in a situation like this. 17 years. Good to get very granular on the number.
Well,
sorry.
Not lie to our audience.
No, devil's in the details. So using an example, say if a client is in an alternative or private mortgage currently right now, it's coming up in renewal in 3 months. What do you think clients should be doing to take advantage of making the most of their situation and getting their ducks in a row in order to adequately plan a refinance?
Yeah, well, ideally, the client is always sticking with the plan.
Yeah.
Right. So whether they're going to buy, renovate, and sell, flip the home, buy, renovate, rent, and refinance, they should always be laser focused on executing to that plan. What we're seeing right now, particularly in Ontario, where the market has churned, is while most are executing, which is great. They're intentionally. Let's edit that part.
Yeah. Intentionally. Yeah.
They're intentionally following through on executing the renovations. Some, to what I believe in most instances, their detriment, are holding on to the properties when they had intended to sell. So they intended to flip. And I say to their detriment because what they're thinking is that the market's going to churn to their advantage. And that's speculating.
Yeah.
Also, particularly if you're using higher interest rate debt, you just look at it like if your rate is 10% and you think you're going to hold for another 6 months to see maybe a 5-month appreciation in value, your mortgage cost might be 10%. So that 5% appreciation is going to be really eaten away in paying that mortgage over that 6-month period. So timing the market is always tough. Timing any market is tough. Any seasoned investor will tell you it's not time in the market, it's time in the market.
Famous Buffett quote.
Maybe Buffett. But yeah, so just executing on the plan, not trying to time the market. That is typically a fool's errand. Of course, sometimes it's going to work out, but very rarely. And what we see is, in a lot of instances, the greedy get needy. So maybe the profit that you had anticipated wasn't there because of a downturn in the market. But typically, it's better to sell, move on, and find the next great opportunity.
Yeah, because I know we had that one client where it was coming. They've been with us for a year. They were just banking on appreciation for the property to go up. They didn't want to sell because they were expecting the market to go up. So in situations like those, we're recommending from our experience, just typically get a refinance as soon as possible because there's no guarantee that the market's going to go up.
Well, get a refi or sell. Like, sure, if it's cash flowing, maybe refi is the solution, or sell. And really what we try to do with our clients is give them information so that they can make an informed decision, right? Like the discussion we just had about interest rate and the likelihood of you seeing a 5% appreciation over 6 months is extremely rare. So just showing them, pointing to data, here's what market trends have been in this location. Here's the very small instances where they've seen that appreciation. So what is the likelihood? Showing them case studies on just moving out of that investment that while may not be as successful as you've hoped, moving out and getting ready for the next, that today's market values is typically the right play.
Makes sense. And I'm just an everyday borrower, real estate investor. What resources do we recommend that they could check this? Like HPI? Like where?
Yeah. There's really great HPI information for most every large urban center.
What's HPI? I'm brand new to real estate. What does HPI mean? What is it?
Home price index. Okay. And it basically aggregates home price data for a particular location, asset type. What we look at is typically for the major urban center that we're lending in. Say it's Kitchener, and we look at single family house, and it basically is an index of what the values are doing over time. So you can see the ebbs and flows of the market. You'll see, that massive spike that we saw, particularly between call it June of 20, just after COVID, all the way up through February of 22, where we had really loose monetary policy. And then as monetary policy tightened because of concerns with inflation, you'll see those asset classes go down. And again, I'm more speaking about Ontario markets right now. We didn't see the same phenomenon in Alberta where we do a lot of lending. So that's a good place to look for information.
Realtors probably.
Talk to your realtor for sure. Talk to your realtor. They'll have insights on, or they'll have thoughts on where the market's going. Hopefully they have insights, and always just ask them to substantiate it, right? Like, what is the data we're pointing to? Is it hyperbole or is it grounded in research? So again, there is a ton of information out there. It's readily accessible. Look at the data, look at the numbers, and don't rely on hearsay, gut, or random anecdotal stories that people are telling you the market's going up or down for whatever reason.
Makes sense. And clients, like using an example. So I find typically myself, and I know some others, examples can work best. So say I bought a property, did renovations to it, the market decreased a substantial amount in Ontario. The mortgage on it's $500,000. Value of it as of today, say it's $525,000.
Right.
So, with realtor fees, legal fees, like what's a client's in a situation like that, what's typically their best scenario?
Well, they have to look at firstly their situation. Like, okay, we know that the investment is at a loss on today's values. Some clients who have significant financial wealth, have a really great balance sheet, are bankable. Rather than selling that, they may decide to hold on to it. Some analysis that'll go into
maybe some additional context. It's in a private loan. This isn't a private loan.
Sure.
So like they're paying high interest.
So when I say hold on to it, with this client that makes this decision, they're going to do analysis around what they can rent it for, cash flow.
Okay.
They're absolutely going to do analysis on what kind of mortgage can I get. So again, I'm talking a client who has the option to go bankable, which typically anytime you go bankable versus an alternative mortgage, there's going to be a lower rate, which in turn will increase your likelihood of cash flow. So it depends on your circumstances. Some people may not be able to refinance it into bank debt. In turn, their cash flow is going to look a lot worse. But if it's positive, maybe they can go and get a more suitable alternative lender. Okay. But if it's negative cash flow and you're, again, speculating that the market's going to increase, typically the most successful clients that we've seen is they sell it. They learn what worked or what didn't work, and they deploy those learnings into their future real estate investing endeavors. So a lot of times, again, this is investing. A lot of times your first loss is your best loss. Holding on to it in a market that's going down with expensive debt is typically, when you run the numbers, absolutely not advisable.
So clients in those types of situations, like say I'm in that situation, do you recommend just calling the mortgage broker first, realtor, like the lender? Like how... In terms of action steps, which one does it kind of make sense?
Okay, so firstly, I think it makes sense for yourself, you the investor, to do the analysis. Okay, run the numbers. What are my options? I sell, I take a loss. Here's what the loss looks like. I hold, I rent. Here's what my cash flow looks like, positive or negative. So kind of run those numbers. Likely, there's going to be a variable on, if you're planning to hold it, what rate can I attract? In that instance, you're going to want to talk to your mortgage broker to understand what that variable is going to be. Are you going to get money at prime minus, prime plus? You need to understand that variable. In a lot of instances, another big variable is what is actually market value.
Tough one.
Through
the everyday,
Ideally, you have the ability to do analysis and get comparables and adjust yourself, right? It's always best to do this analysis yourself. You're learning. There's nobody that cares about your numbers more than you. But of course, ideally you have a trusted realtor within your network. You're going to involve them to help you build that out. We're unique as a lender in that we do that analysis, like we do valuations for ourselves when we lend. So, we could help with adjustments. We could help with comps. You could bounce ideas off of our underwriters who have underwritten hundreds, if not thousands, of these loans into the billions of dollars. So they have a lot of expertise and know-how on what works and what doesn't, and they've helped clients navigate through this. And again, the navigation will be through education.
Yeah.
Right? We don't want to tell people what to do. We want to educate people what to do so that they make the most informed decision that makes sense for them.
Makes sense.
Yeah.
Makes sense.
Yeah.
Love it. Very good stuff. That wraps up another episode of the Real Estate and Wealth Podcast. Be sure to hit that like button, share with fellow real estate enthusiasts, and subscribe to stay in the loop on all upcoming episodes. Get in touch with the team at Calvert Home Mortgage Investment Corporation by calling them at 1-888-752-4642 or email admin@chmic.ca. The opinions expressed in each episode belong to the individuals featured and do not represent the views of Calvert Home Mortgage. While we provide valuable insights, consulting with qualified professionals ensures that your unique financial circumstances are carefully considered, aligning your investments with your long-term objectives. Calvert Home Mortgage Investment Corporation is not a financial advisor, and we cannot advise you on making investments. There are risks to investing in real estate and the potential that you can lose all of your investment.